Stocks rebounding today, but are still on track to snap a 5-week winning streak as inflation fears rattle markets. Our next guest has some stocks that he says have enough dividend growth to outpace inflation. Joining us now with some picks, Larry Cordisco, portfolio manager of the Osterweiss Growth and Income Fund. Larry, good to see you.
Nice to be here. Thanks, Melissa.
So let's get this straight. It's not just that they have a high dividend yield or a dividend yield that you like, but it's that the dividend yield will actually grow faster than inflation. So what is your assumption on inflation for next year?
Well, boy, that's a tough one. And we think it probably comes down from the levels it's at now, but may also, or probably does stay persistently higher than what we've seen the last, 5 or 10 years for sure.
Okay, let's run through some of these stocks because I know our viewers want to hear them. Visa, if you can talk me through how you think about a company raising its dividend and what makes you think that the growth in the dividend will outpace inflation. Let's use Visa as the example.
No, that's great. So Visa has actually increased its dividend by more than 3 times over the 3 times. The dividend has gone up 3x over the last 5 years. So it's already a company that it's got a history of increasing its dividend. If you look at where the business can accelerate over the next 12 to 18 months, they have a lot of tailwinds, headwinds turn into tailwinds for Visa. And specifically, we're talking about international travel and cross-border spending. They make 3 to 4 times as much money on those transactions versus what they do domestically. So as travel comes back, and it's only 60% of what it had been pre-pandemic, we think that's a really big tailwind to Visa increasing its earnings growth, which will translate into higher dividends.
UNP, obviously there's a need to get goods places these days, Larry, and pricing remains with the transporter at this point in time. How do you think about UNP in terms of if, let's say it didn't have a dividend yield? Would you like it as a company? Are you confident that the stock price itself will go higher even without the added bonus of the dividend yield?
That's a great question, Melissa, because that underpins our investment thesis for any of these names we're talking about. Earnings growth has to happen for dividend growth to follow, right? So your question is right on the mark. And to answer it, yes. If you look at what's gone on with the pandemic and all the supply chain problems we've had, Union Pacific's faced a tremendous amount of headwinds. In fact, if you look at their premium businesses like intermodal and autos, the volumes are down 8% or 9%, I think, year over year. Those headwinds turn into tailwinds as we get into inventory replenishment in 2022. And one of the things that we thought was really interesting, if you just look at the macro economy, inventory levels now compared to GDP are significantly lower, 25 to 30% versus what they were in the 90s. This long-term headwind against inventory levels in the United States probably reverses now that the pandemic has laid bare a lot of problems with just-in-time inventory and supply chains. Right. But we think there's a multi-year story with a company like Union Pacific.
All right, CVS is another dividend payer that you like, but I want to skip to AMD because it doesn't have a dividend, and you let that slip in there. We're not going to let that go without a question. So why did you put that in there? And do you think that its growth is just so spectacular that you don't need the promise of the dividend yield to help you buy it?
Yeah, we've liked AMD for a long time. We've called it the Intel Slayer in the past, and we think that the data center story for AMD accelerates in 2022. Market share gains against Intel will accelerate. And we also think AMD becomes very well positioned to get a lot of market share in the GPU, the NVIDIA market in the data center. And what they have is a really important competitive advantage. When you look at GPU accelerators, basically it's x86 chips like Intel makes and AMD makes, and GPUs talking together. Well, AMD makes both the x86 chip and the GPU chip. That's a powerful combination. We think there's a lot of cloud adoption on the come for them, and we're not sure that's really priced into the shares.
So you think it's undervalued still?
We think business will be better than people expect, and the stock price will respond.
All right. Larry, good to see you. Thanks for your picks. Larry Cordisco with the Osterweiss Growth and Income Fund.